Hey there, everybody. Thomas with Basecamp Trading. It is Friday, July 31st, and we're going to take a look at the S&P and a couple other markets and talk a little bit about one of my favorite types of trades, and that is a compression breakout, because we had a couple of those happen earlier today in the futures markets. So before we dive in here, though, make sure you hit that like button and subscribe on the YouTube channel if you haven't already done so. So a compression breakout. Let's talk about what that is and how it works. Markets don't typically just go straight up or straight down, right? They move up and they come back down, and they go back up and then come back down. And really they go through phases of compression and expansion. So in this case, you can see here, this is when we came into the morning in the trading room, we talked about, okay, our compression zone for the S&P is going to be between 32.63.5 and 32.45 and 3/4. That's where we had this pivot low to high, and then we started pivoting around inside of the range of the previous pivot low to high. We then came and we went from very small price bar ranges, and we started to accelerate out of it, broke to the downside, and then this market just accelerated down, set up a bear flag, and then dropped again. So this was a compression breakout that would have triggered, if you're in the trading room, it triggered down around 32.44 and a half, 32.45. And then followed through very nicely all the way down to a low today of around 32.12. Now, we also had the same type of setup occur in bonds. So if you look at 30-year bonds here, this was our compression zone this morning. We had support at 182 and 8/30 seconds, resistance at 182 and 21/30 seconds. We ended up breaking through the lower end of that compression zone, dropped down, retested, and then sold off again. And you had a nice expansion phase there. Now, when we're trading, ideally, we're going to be getting into these trades whereas the market comes out of the compression and starts going into expansion. That way, once we get in, it starts to accelerate our direction. And that way we don't spend any time underwater in the trade, and it just moves our direction very quickly. And that's how it worked out with both the S&P and then again here with bonds, and also in gold. We had our compression zone up here in gold. This was our support at 1988. We broke out of that, dropped down about 12, 13 points to the downside before bouncing off there. Now, I'm not here to tell you that every single time a market comes out of compression that it accelerates, because there's no such thing as a 100% win rate trade. So, for example, we also had crude oil today. This was our compression zone we were watching. We broke out and it accelerated down a little bit, but didn't really follow through too much compared to the other ones, or relative to the other S&P, bonds, and gold. So keep an eye on these types of setups when you see a market that's moved into a compression phase, like you did back here in crude oil yesterday. We came out of the compression and we start to see the price bar accelerate down. That's when you go into expansion, and that's where we make the money, is on those acceleration phases, or what we call those expansion phases. So keep an eye out for it. Again, it's one of my favorite types of setups, looking for compression breakouts. They're a really high probability trade, in my opinion, when you time them right and when you have things like momentum in your favor. But that's going to be it for today. I hope it helps. I'll see you in the next one. And until next time, everybody, happy trading.